Good evening, everyone. Welcome to the Sunday night strategy session for December 27th, 2015, the last strategy session of 2015. Who's excited to go into 2016? I know I am. What about you, Paulie?
No,
No, Paul's excited too. You can hear it in his voice. Paul, did you have a
I
nice...
have unfinished business in 15.
Okay. You had what?
I have unfinished business in 15.
Me too. I
But I'm excited for the Cowboys to get to 16 because we'll arguably get one of the top three draft picks and
Very good. And
maybe
you're
Phillip Rivers, and we'll be off and running to the races in 2016.
Well, when the IWM crosses over 120 for the close of year, I will be enjoying some caviar and lobster, courtesy of my boss, Paul Schatz. I can't wait. I'm not going to have the Russian caviar. I'm going to have the Iranian caviar. There will be pictures. We should stream the event on Periscope after
So we should invite everybody.
if you're paying. Now, listen, I will absolutely hurt your credit card if the IWM closes above 120. And I know you'll be happy to pay it. But you haven't
Right.
seen me eat caviar. I could do damage with caviar and lobster. And what else? Foie gras, right? Is foie gras expensive? Was it duck liver or something?
I just had now maybe this is an oxymoron. I just had the greatest meal in the 42 years I've been coming to Vermont. I think it was the greatest meal I ever had.
Snow? Would you have snow?
No, I had real food.
Or what'd you have?
I had um, I had filet in this incredible, very light cognac cream sauce, and I had a stuffed lobster tail that was off the charts great. And then Terry had zuppa de pêche, and
Where is this? At a restaurant?
yeah, it just opened up in Wilmington, Vermont. Manja Beve. I think it was the best meal I had in 42 years up here. And the wine list was phenomenal.
What do they stuff the lobster tail with?
Um,
Crab meat?
I didn't pay attention past the crab meat and the breadcrumbs, but there were other things. It was really, 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 really phenomenal.
Yeah. Well, we
And
had...
I want you to know I rushed back just to be with you.
Okay, good. I thought you were going to take it up there. I thought you were going to do it from there.
From the restaurant.
No, from Vermont.
That's where I am. I'm in Vermont.
Oh, you rushed back from the restaurant. Ah, very good.
Right.
You just went, you and her? Nobody else?
No, we got lucky. So the kids decided they didn't want to go. They wanted to give us a night alone. So Katie watched the boys, and Terry and I had a night out.
Oh, wow. I can't believe she's old enough to freaking babysit.
Yep.
I'm still waiting on the money.
She's sitting next to me.
She's waiting on what? Her pay?
Money. She wants money for babysitting.
How much does she charge an hour?
She charges nothing, but we'll give her something.
I charge 11.
Wow. Around here, it's 15 minimum.
Well, she's not your daughter, and come on, she's
And
12 years old.
I live in a poor neighborhood, and it's 15 an hour. Up there, it's got to be 25 an hour minimum. How many hours? 2?
Well, when you reserve a babysitter from the mountain, it's such a scam. They charge you 15 an hour plus $1 an hour for each additional kid. Plus, if they're not the same last name, they charge another $15 an hour per last name.
Yeah, but why would you have kids that were on different names?
Because most people up here have multiple families either staying together or going out together. So if we go out with another couple and we used to share a babysitter, they charge us $17 and the other family $17 an hour for one babysitter in the same condo.
Wow, that's a good deal.
Scam.
All right, here's the economic reports coming out. Nothing on Monday. Tuesday, goods trade balance and the CB consumer confidence. That's at 10 o'clock. On Wednesday, pending home sales and crude inventory, oils, or actually it's crude oil inventories. On Thursday, we have the weekly unemployment claims and the Chicago PMI. And then Friday is Happily New Year for everyone but the Jews and the Chinese, right? Or who else doesn't celebrate on January 1st? The Jews don't. Jews had it in September. The Chinese have it later in January, right?
Well, we do. We celebrate 2 New Years.
We do.
Sure.
Okay. All right. Well, then the Jews can celebrate also. Okay. So, but the Chinese, I think they have it later on in the year. Okay. So, that's what we have as far as economic reports, just the weekly stuff, except for, I guess, the consumer confidence. But what about the market? Well, Santa Claus did come to town. We saw Santa Claus show up and put in a nice little rally. But have the bullets all been spent here? You can see this is the futures.
Didn't I say coming into last week that we were going to bottom Monday or Tuesday and take off, or no?
I don't know, but it looks like we bottomed last Friday, but I don't know. But we did bounce. But I'm going to give it over to you in a second because I want to know if you think that we stall out now at the 200 day. I mean, this is the futures, but I can easily go to any of the other S&P products like the SPX or the SPY, whatever it is, and you can see that we're at basically in the same situation at the 200 and at the 50-day moving average. So the question is, do we rip through this? After all, 1939, the first time we've had a pre-election year where the Dow closed red, and guess what? It really doesn't mean anything if we do close red. There's no prediction to that. Like, there's no, I don't know what that predicts. Oh, okay, so we closed red on a pre-election year. It's the first time since 1939. So what? You know, I mean, it's cool to talk about, but I mean, big deal, right? Am I missing something here? Does it forecast anything? Does it predict anything? No. So big question now is, can we fight through these and go? And another thing, Paul, and we've been getting some questions on this, so I would like you to address this, is what are the ramifications, not so much that if we close red on the Dow, but what are the ramifications if we trade down into the end of the year? Are there ramifications that you are aware of? That's it. Now, before I hand it over to Paul, I just want to let you know I'm not 100% certain I'm going to do this, but most of the time I have a New Year's Eve class. I just get together with me, myself, and I, and whoever else wants to join me, because a lot of people are like me and don't do anything on New Year's Eve. So I get together and I answer questions and what stocks you want to look at and all that. The admission price is free. There may be a gate. You may have to like a page or do something stupid like that, but otherwise you'll be able to get in. And if you are interested, just watch your email boxes because we are going to, and now we are going to, what? I just got confused here a little bit.
Wow.
Oh, I'm sorry. But, and I'll answer all your questions. You can ask me, opinions on stocks. We'll talk about the market. We'll talk about the great election year trend and all that other good stuff. And that's it. So check your mailboxes. If I'm going to have a New Year's Eve class, you'll get plenty of notification on it, at least 10 emails on it. I'm sure I'll get some people unsubscribing because they don't like me constantly reminding them. But, oh, well, if you can't get reminded about a couple of classes, I don't know what to tell you.
Better remind me.
That's it. Yeah, we'll also talk about food. Of course, we'll talk about food. Anyway, with that being said, everybody, unless you're Chinese, have a Happy New Year. Now that I'm allowed to wish the Jews a Happy New Year too.
Sure.
And we always celebrated both, so I guess it's okay. I just thought that, But anyway.
You want to have a breakfast today?
Eggs Benedict?
I began with scrambled egg whites, tomatoes, and mushrooms, just to add a health element to it.
Yeah.
And then homemade sunflower bread with butter,
Ugh.
followed by a chocolate chip Belgian waffle heavy on the whipped cream.
From the whatchamacallit? From the place on the mountain that's so awesome?
No, we went Dots. It's kind of a local diner we went to. It rained pretty hard all day up here.
All right. Anyway, that's it.
And then we went maple syrup tasting.
Very good.
Yeah.
Yeah, like there's really a difference between one maple syrup from another.
No, it's not the brands, it's the different grades of maple syrup. We learned a lot.
Really?
Yep.
Well, after my second or third taste, I'd have to sleep because I'd be worn out from all the sugar.
That's what Terry said.
All right. Anyway, everybody have a happy new year. Paul, you got to text me when you're done and you got to send me a piece. Okay.
Oh, I always forget to do that. And I
Okay.
was sitting. All right, I'll do it shortly.
Okay. Have a good new year, everyone.
I'm in Vermont and I'm on my little laptop, not my big one. So sometimes I have a problem when I open up the question window. Um, does anybody have a problem seeing my screen in front of me? Only post if you have a problem. If you have a problem seeing the screen, let me know. Now I'm going to open up a window and see what happens. Whoops. Wrong window. Questions. Okay, Joe, you have a problem. Rick can't see it. All right. So I think it's whenever I open up one of these like sub windows in GoToWebinar on my laptop, because I have a MacBook where I loaded Windows, so it's a little funky sometimes. I will do my best to figure this out along the way. But God willing, we'll be back in Connecticut over the next week or so. Okay. So last week at this time, we had a big sell-off, and there's a screen open in the middle right now, so I know that you guys have a problem seeing it. I'm just making sure they don't miss any questions. So last week at this time, we had a big rally on the Fed, and then even bigger sell-off on Thursday and Friday. And what I said was the odds favor the market putting in a bottom on Monday or Tuesday. That's what's supposed to happen. If it didn't happen, then something else is at play, and we'll have to revisit this week. Thankfully, the market listened literally right away, and we took off. Now, I wasn't thrilled the way we took off because we had two big red candles, which I'll show you in a second. And we didn't scream higher, but we went higher Monday, Tuesday, Wednesday, and then Thursday was a holiday shortened session that really nothing happened except we sold off into the close. Scott, I'd be thrilled to if IWM closes above 120 and I can pay for Tiny's dinner, and I'm happy to buy. I don't even need a laptop. I have a huge Dell laptop at home. I don't travel with anymore, but I'd be happy to buy one of those new Surface Pro laptops, whatever thingies. All right, so Thursday, let's start from the minute. This is what happened Thursday afternoon. Right into the close, S&P sold off 10 handles. Should we be worried about that? Not. I mean, first of all, there's no liquidity, nobody's around, and I've seen this happen many, many, many times before on Christmas Eve. So am I surprised that we sold off hard into the close? No. Essentially, everything closed within a couple of basis points of unchanged. Breadth was positive. No big deal on Thursday. So let's not worry about Thursday right now. Let's dive in. Okay. Okay. Here's a Dow. So here's what I didn't love. I didn't love we had these two hard red candles on the right side of the chart. And then we rallied for 3 days. None of the rallies on Monday, Tuesday, or Wednesday were convincing. They were good. I mean, we gained back, roughly what, 2/3 of what we lost, but it didn't do anything to negate these two on the nasty red candles on the right side of the chart. That's what I'm thinking in the back of my mind. These are kind of open issues to deal with. Either we're going to close above this red candle that happened 6 days ago, or below this red candle. We're not going to stay in this range forever. Um, this week is another holiday short. No, it's holiday shortened week. We have 4 full trading days. The model for this week is generally higher prices Monday, Tuesday, and Wednesday, and then Thursday it has become a mildly negative down day. We'll see what happens. So here's the Dow. Although we had a nice little Santa Claus rally so far, the true and traditional Santa Claus rally literally just began on Thursday. But the way I look at it is I look at a low in December that is surrounded by options expiration with a couple more things attached to it. That to me is a Santa Claus low. But really, last week the bulls bounced back a little bit. S&P 500, guess what? Kind of sort of the same thing. It's still dealing with these 2 harsh red candles. So what are the odds favor? I mean, the odds favor that we close above the high from 2 weeks ago, the Fed week high, which is up around 209 on the SPY. Mid caps, lo and behold, as I talked about last week, mid caps are right at the high of the candle. So price-wise, they're much weaker than the Dow or the S&P. But in the short term, they've regained essentially all of what they lost during Fed week, which is good for me because I own, as I told you guys last week, I own the mid caps and hugely the small caps. So I said for several weeks I'm going to buy the small caps the second half of December, and I own, that's my largest position. That's one of my 2 largest positions is in the small caps. So the bet I have with Tiny is, not a bet, I just said if the small caps close above 120, I will take him to dinner at any steakhouse he wants in the city. So we still have a fairly significant, 4% rally to go. We'll see. Is it impossible? No. Is it likely? No. But we'll see. But what I like is that small caps are now leading, and mid caps are right there. And Qs, the price action looks fine over the intermediate term. Since the middle of October, we're consolidating. I would imagine that the Qs take out their 2015 highs early in 2016, up above 116. So those are the U.S. indices. Europe, nothing's changed really in Europe. I mean, we had a couple-day rally, but we're still in the context of this kind of ugly-looking consolidation since the middle of August. It's certainly not a picture of strength. And emerging markets, which 2 weeks ago traded really well, and it certainly looks like the emerging markets wants to run 5 to 8% in short order. So I would be surprised if the emerging markets just turned tail and took out the December lows. The odds certainly favor they've got some upside left to it. I've done nothing. I still own FXI. It looks okay. Not great, not horrible. And I still own EWH, which the same thing, looks okay, not great, not horrible. I'm going to pause and look at the question box, which may cover up some things here. So hold on a second. Okay, Burwell, let's see. Do I see a significant market top this year? Meaning 2016, as I'm guessing what you're saying. Say 15, so do I think we're going to fall 15% or more? Not right now, I don't. If we rallied from here and the internals did not improve significantly, then I would say we got a shot at another, full-fledged 10% correction. Right now, I don't see it, but that could change in a week or two. Again, what I've said many times is that when rates go up, which they are, volatility normally goes up too. So let's not care about the market interest rates. Let's just know that when interest rates rise, volatility rises as well. Do you see the NASDAQ 100 leading the stock market rally with the net? So no, as I said the last couple of weeks, I think the Russell's going to rally, or is supposed to rally into the new year, and then real leadership will emerge. So gun to my head, I'd probably rather own the NASDAQ 100 after the first week of 2016 than I would the Russell. But I don't want to get carried away when we're not there yet. Very well. Let's see. Okay, that's it for questions. If I missed anybody, I apologize. Just post it again. All right, let's go to the key sectors. 4 key sectors. Let's go to the semis. Here we go. Semis have almost regained what they lost from the 2 big down days. And they should head back to relative new highs, meaning trade above their fourth quarter peak early in 2016. So semis look like they have more to go, which is good if you're a bull. IYT, on the other hand, the transports still, just cannot get out of their own way. So I had, terrible word to use, quote unquote, hoped that they would take out this peak up here. They cannot get out of their own way, even with oil collapsing. And it's not the airlines, because we know that the airline stocks trade fairly well. So it ain't the airlines. That's a problem. So the airline stocks trade well. And you look at Federal Express, great bellwether for the economy, not bullish. Best case is neutral. But UPS, to me, looks even worse. So that's not a group of comfort. Union Pacific Rail, which has rails and energy. You get a nice bullish engulfing down here. Maybe this thing gets going. I'd like to see it get going, but this stock's been bludgeoned between the rails stinking and energy stinking. Norfolk Southern was involved in some M&A activity, so we're not going to really look too deep in there. What else we got? CSX. Chesapeake Rail also kind of stinks. I mean, the trannies really kind of stink, except for the airlines. So we got the semis look okay, and the trannies stink. The banks, certainly are not another picture of comfort either, although they're a lot stronger than the trannies are. Best case here, they're neutral, but you cannot say they're bullish right now, which bothers me, because I thought that they would not have this deep of a decline on the Fed. So they sold up before the Fed, but I did not see the banks selling off 10%, which is what they've done. So that's a little troublesome. But on the other hand, we have the consumer discretionary, which so far look a little weaker than the Qs, but similar. They're consolidated. The all-time highs are here, and they're hanging in. So we've got the semis look fine, and discretionary looks fine, and the trannies and the banks are not. So not a picture of all systems go, close your eyes and buy. Let me just pause for 1 second. Burwell asked how I could use so many moving averages. And the answer is I don't. Although they're on my chart, For full disclosure, I put them there because of Tiny, not because of me. So we have the 20, the 50, the 89, and the 150, and the 200, and then the 350-day is a long-term moving average. Tiny is a much bigger user of moving averages than I am. I'll pay a little bit of attention when there's a death cross or a golden cross. I don't trade it, but I just want to know what everyone else is looking at. So I don't pay a whole lot of attention to the moving average. So let me make this comment. So XLY just kind of bounced around the 200 for 2 months. Nobody can say that for these 2 months, the 200-day moving average mattered. It didn't matter at all. But yet, last month, look, the 200 days held each decline. Sometimes they matter, sometimes they don't. I just want to see what everyone else is looking at. Okay. Let's go on to the other sectors. IGV software. Software still has not done anything bad. It's a nice support in the 101 area, and every time it comes down here, buyers come in, and it's a couple of percent from an all-time high. So software still looks fine, as it has, for the X number of years we've been looking at it. Telecom has done a lot better in the last couple of weeks, thank God, because it's been an embarrassment for me almost the whole year. A couple of really nice days this week, right into the 200-day moving average. Which does it matter? Well, it didn't matter in here. Well, I don't think it's going to matter here either. I think telecom's going to go higher. Diversified financials, as we teeter-totter, clearly look better than the banks do right now. Do they look good? I wouldn't say they look good. They look fine, but not nearly as weak as the banks. Retail, as we know, for weeks we've been talking about it, they stink. Retailers look horrible. So, as we've been talking about, it's a very mixed market. It is not broadly participated. It's a narrow market. It's indicative of a market in the fourth quarter or the end of its bull run. Home builders. They've done nothing since the crash in August. They spent almost 5 months consolidating in this one candle from the August crash. So I have nothing to say here. I thought they'd be a lot better coming out of going into the Fed move and out of the Fed move, but they've done absolutely nothing. Zero. XLI Industrials. To me, it's not a bullish picture. I hate this tall red candle from last week. We're rallying. To me, it's a pair of twos again. And material stocks, kind of sort of the same thing. Pair of twos. Could go either way. I don't really have a strong opinion. Internet sector, which, as you know, I own a big piece of. Dial down a little bit. It looks fine. It's certainly not a picture of resounding bullishness, but it looks fine, the internet's. It's becoming tougher and tougher to find these epitomes of bullishness. What else? Healthcare. I've said this for many weeks. This looks like, in the last 2 months, it looks like a sector that's in consolidation. It's bumping up against the 200-day and the 150-day moving average, if that matters. It's coiled up, as Tiny would say, and I think this is going to resolve itself much higher. XLV. XLB, similar but not as strong. This also looks like it wants to resolve itself above 350. So I'm looking for both biotech and healthcare to move higher into the new year. Energy. Big week for energy and the energy services companies. But is the picture resoundingly bullish? It's not. You've got now 3 bottoms, one in August, one in September, and one in December. Triple bottoms typically don't hold. But could we see some more upside first and then rolling over? Sure. We could, tax loss selling is abating now. So energy could run, I don't know, 10, 20% and then roll right over again. I still have the same positions I've had all year, albeit with more egg in my face, but they certainly could run 10, 20% and then roll over again to new lows. It's just unlikely that XLE has seen the final low. It's not impossible, but you wouldn't bet in that direction. Let's see, TAN, which is kind of like energy, is consolidating nicely after you guys pointed out to me last Sunday that the tax credits got extended. This is nice. If you're a TAN buyer, even though we're overbought on stochastics, this looks like it's got another leg higher coming on these solar stocks. The defensive stocks, REITs, they look fine. I mean, REITs, best case, worst case is neutral. Best case is we're taking out this peak, the peak from October, November, and December, and then we're going to head towards the 78 level on the REITs. They do not look bad. Utes also don't look horrible, but clearly not as strong as the REITs. And finally, XLP, which I have a very large position in as well, for full disclosure, also looks like it's got some further upside left, probably to all-time highs again. So the defensive sector probably looks the best, which is not exactly the epitome of a really healthy bullish market. But again, this is how bull markets end. And this end could go on for another couple of months or even longer than a year. And we finish up with GDX and then take questions. So here's gold miners. I don't have an opinion. I don't like this whole 6-month bottom here. It's very atypical. We normally bottom from a much lower level. And I hate this tall red candle a week and a half ago. So they're rallying, but I'm not buying it yet. All right, now let me see if we have any questions. Let's see. Scott, I promise, if I will trade, he can have all the, well, no, I'm not going to say that he can have all the caviar he wants, and I'll be broke. But I'm happy to give him his caviar, and I'll give him some moving averages back, and IWM will be above 120. I'll be very happy. Dimitri, how high? I'll get to natural gas shortly, I promise. Burwell, when you see stochastics pinned above 80 and thus unable to decline, do you ever trade? Yes. Sometime in a really strong trend, stochastics will get overbought. So let's just let me go to. So Burwell asked, here's stochastics coming out of the October bottom, that they got pinned above 80 right away. In the first 2 weeks, stochastics were pinned above 80, and they stayed above 80 for a month, and you had a much bigger rally. At the beginning of trends, both directions, you will see stochastics pinned above 80 and below 20. So yes, stochastics work great in the trading range market. They do not work well at the beginning of a trend. John asked, do I see any bubbles that might cause a crash in 16? John, I don't see a single bubble left in any financial market. Let me make sure no. John, I don't see a single bubble left in any market. So I don't think any of them are going to crash. We could certainly have declines. Stocks could decline 20, 30, 40%, but I don't think they're in a bubble now, nor were they in a bubble anytime recently. All right, let's forge ahead. Bonds, TLT, which I think do I still own it? I do still own TLT, not because because I like it, because it just hit one of my macro screens. It's gone nowhere for months, and it's going nowhere quickly right now. And do I have an opinion on it? Not really. I think it's a pair of twos. The dollar. I've said this since the big crash. This big crash put a cap on the bull market temporarily, meaning we probably, best case, go sideways for months within this range. Worst case, we could probably give back this last bull run. But so, which means if I don't love the dollar, you have to kind of like the euro and maybe a little bit the yen. The euro looks fine, probably goes higher. Any move towards 110, 111, I'm a huge seller over the long term because I think the euro is going to below 80. And the yen, same thing. Any rally we get, which to me is right here, I think you can start selling the yen again. I don't care if it goes to 82. It won't bother me. But I think longer term, the yen is going to get cut in half. And the loonie has been an absolute unmitigated disaster. So, Burwell, you asked about stochastics. Look at this. Stochastics got pinned below 20 when the loonie was 77 and change, and it stayed, oversold all the way till. So it stayed oversold all the way down to 73 and a half. Got overbought really quickly again, and then just collapsed again. That's what happens in really strong trends. Stochastics will fool you and hurt you. All right, and gold, if we're looking at currencies, again, gold typically doesn't bottom like this. Could it go higher here? Absolutely. I wouldn't be surprised if it rallied back to, I don't know, 1100, which is not a huge rally, but I don't see this the beginning of the huge gold rally coming, which I do see down the road. Crude oil. Talked about energy. You don't see the triple bottom in crude that you do in the energy stocks. So here's your bottom in crude back in August. Here's your recent low. Crude is rallying very hard. I talked about it last week. I said you're just going to wake up one day and it'll be some kind of melt-up rally, which I don't think this is a melt-up rally, but it's certainly a pretty good short squeeze in crude. Natty gas, kind of sort of the same as crude. We have this spinning top down here right at the low. They're squeezing the shorts pretty good. Smart money remains, as they have been from incredibly higher levels, very long natural gas. Let's see. Let's do copper. Boy, copper cannot get out of its own way again. Sure, it could poke a little bit higher. It wouldn't shock me, but looks like it's got lower prices coming in copper still. Hashtag disaster. Let's see. We did copper, crude, natty gas, gold, currencies. Let's see if I missed anything. All right, let's forge ahead. Actually, let me look at questions for a minute. Tracy, do I think the gold market will rally if stocks roll over? No, I don't. Let's take a look at it. So stocks declined and gold rallied here. That's about the only inverse correlation I see. Because stocks rallied here and gold rallied there. And then stocks rallied here and gold declined there. So the correlation of late has been non-existent, or the inverse correlation for that matter. All right, let's see if I missed anybody else. I keep hitting the wrong button. Jeez. Okay. If I believe the end of the bull market is coming, what's my recommendation? Where to put money to work? Gunter. Gunter, that is a fantastic question. And on December 27th, to be totally candid, I have zero clue right now. I don't think the bull market is ending tomorrow. But when it does, we're going to have to watch and see how it rolls over. Does it roll over in some kind of deflationary spiral where everything goes down but bonds? Or does it roll over a la 2001 where certain sectors begin to outperform? So we're going to have to see. But Gunther, I haven't, bad to say, I don't know right now. Although if stocks began to roll over hard, I probably would want to continue to short the yen and the euro. Burwell, the deflationary forces seen in commodities and commodity stocks spread to the stock market going forward? Question mark. Well, that's certainly a possibility. That commodities are but 2 days off their lows. So could this collapse lead to problems in stocks? Possible, but if history is any guide, no, it's not. It's not going to happen. Oh, I can't pull it up anymore. Shoot. I want to get a commodity index chart going back 30, 40 years, because you'll see that when commodities were collapsing in the 80s and 90s, stocks powered ahead. So it's possible. I just don't see it happening where we've already had this deflationary spiral in commodities. I don't see it continuing to happen or I guess I don't see contagion happening. So let's finish up with wheat. There's nothing going on in wheat. Close your eyes, go to bed, wake up next year. Nothing going on in wheat. Corn, guess what? Kind of sort of the same thing. There's nothing going on in corn. Zero, nada, zilch. Soybeans, except for 2 up days last week, 2 weeks ago, there's nothing going on in beans either. Go to bed, wake up next year fighting. I'd love to see some of these ags, the grains, get a little bid to them. I think it'd be a fun trade because once they get going, you're going to see massive short squeezes in the grains. Sugar. We talked about this for several weeks. Smart money is very, very negative in short sugar. We had a reversal end of October. We had a reversal in November. We had a reversal in December. And now we're rallying again. I think you wait for yet another reversal and you short sugar again. So sometime in 16, sugar should go down, I don't know, 25, 40%. Cotton. Well, nothing really going on in cotton. You had a nice day on Friday, I'm sorry, on Thursday, but there's nothing going on in cotton of consequence. You want to push me? I'd say you got a couple of tall green candles that would argue for further upside in the coming days, but it's nothing with a high level of conviction. And why do you keep beeping? Cocoa. We rolled over. We talked about this. We rolled over. This looks like a pretty nice little peak here. We rolled over. The bulls put up a stand last Wednesday. Couldn't hold the gains Thursday. I'd probably walk away and do nothing in cocoa. And finally, coffee. Will it ever rally? Maybe in 16, but not this week. There's really nothing going on of significance in the commodity complex. Let's see. Don't commodities start to rally at the end of a bull market? Tracy. Well, I'm guessing you're pulling out, you're going to say the example is 1980 would be the first example. I don't think, Tracy, there are enough instances that would have any kind of statistical relevance or significance. So commodities began to rally. I got to find a commodity index that I can follow. Because in the 70s, commodities rallied huge in the 70s. And that was during, kind of a secular bear market in stocks. And then they began their rally in the middle of a bear market in stocks in the 70s. And then they peaked in the middle of nowhere in 1980, or it was 81. But the bull market in equities didn't launch till August of 82. So that doesn't really, there's no significance there. And then commodities bottomed in 2001 when the bull market was long over. I don't think it holds water, but I want to look at a long-term commodity chart. And I can't pull one up for some reason. Yeah, John, DBA doesn't go back that far. None of the commodity ETFs go back 30, 40 years, which I think you have to look at. I have the CRB index in my office going back to at least 72, which would be a better picture. And I'm sure I could pull it up if I spent some time on someone else's website. Oh, I know what we forgot to do. It's so funny that, when you're logged into Amazon or Prime, whatever I've got, it serves you ads. So my little guy wants to buy sunglasses, and I said he has to find a case too. So he was looking for sunglasses. I was shopping for Spider ski pants today online because I found them in the store. Although this case study on the fee-based advisors variable annuity, I don't know why it's there. Oh, it's Jefferson National. That's why it's there. It's so funny that they so smartly, the bots serve you really good ads. In any case, let's look at the AD line. There's absolutely nothing to glean from this. Zero, nada, zilch. In the middle of nowhere. Junk. As decimated and obliterated as junk has been, there's nothing redeeming yet to suggest that we're going to march higher with any kind of significance, but I do believe we will see a major low in junk bonds next year. Let's see. Is it possible that the winter season of the K wave may be a better comparison of where we were present with respect to declining commodities? So I think, Burwell, I think Tiny has opinions on the K wave more than, or I guess, I think he believes in it a little more than I do. Not that I don't believe in it, but I find it to be difficult to use with the kind of analysis that I do, because it's such a longer term indicator, if you will. maybe not indicate is not the best word, but there's certainly something to it. It just doesn't help me enough, and because I'm more of an intermediate term person. But if Tiny comes back on, he can cycle. There you go. Thank you. So he can speak to it more than I can. All right. Last call for questions, comments, concerns. And if you guys have any, post them. If not, I want to wish that everybody who celebrated Christmas had a great Christmas. We celebrated with our friends in Vermont, and they had a big dinner of, 30 people. Lots of good wine, smoked ribs, lasagna, 30 appetizers, and a good dozen or dozen and a half desserts. So that was fun. And it's been the worst vacation for skiing I've ever had because there's essentially no skiing. 4 to 5 runs a day, and that's really about it, which kind of sucks. And Scott's throwing the gauntlet down. Apple's going back up. Scott, I can't change my mind because I don't believe it. I mean, Apple's has been a disaster. So I'm sticking. Not only am I sticking by it, but I'm probably going to do a negative blog about Apple sooner than later. I just like to see a rally back to sell some calls against it. I think that'd be great. But right now, I'm more concerned that it heads to 90 than it heads to 130. So I know the place where I ski. Here's the company, Peak Resorts. You think this, look at from 770 down to 520. I mean, in all the years I've been here, I've never seen a week like this. So besides the mountain being dead and you can't even see. So you can kind of see this is the main trail, and it's like a little bit of an S coming down. There's like nothing. There's a couple of ribbons of snow left. It should have gotten packed yesterday. Yesterday and then today. And while I feel for the mountain and the shareholders of Peak Resorts, all the little local merchants who wait all year for Christmas week, where everyone's packed and just doing huge business. There's nobody spending any money. And I'm going to go buy a pair of pants, which I'm going to buy anyway, and a pair of mittens. So they'll get $500 out of me. But all my friends, I mean, a lot of them didn't even come up. It's kind of sad what's going on. So as much as I love the fact that not spending any money on heating. But for seasonal businesses, it's the death knell. It's kind of sad. Yeah, Scott looks exact. So Scott, I've got friends out in Kirkwood and Tahoe who are. I gave it to them pretty good the last 3 years, and now they've got 80 inches in 4 days. But it's terrible in the Northeast. It's an absolute disaster. Let's see. Yeah, James, I know I should have come to Whistler. I tried to book a trip to Utah, but first 3 of the 5 family members voted no. They didn't want to go, and only my 7-year-old wanted to go. And while I love him to death, and he's my ski buddy, the thought of taking him alone to Utah, I guess I could have put him in ski lessons, but he wants to ski with me, and I'd rather go ski some of the hairy stuff. Let's see, who asked Chris with the FANG stocks? Burwell, do I feel like the FANG stocks are going to lead the market higher? Let me say this. Here's Facebook. Still looks bullish. Netflix. Still looks bullish. Google Alphabet. Still looks bullish. What did I miss? Oh, Amazon. Thank you. Amazon still looks bullish. looks just like what we saw in 2000. The strong hold up till the end. If the FANG stocks don't hold up till the end, we got big problems with this bull market. So yes, I think the FANG stocks are going to hold up until the bitter end. Any other questions, comments, concerns, quibbles? Okay. JN, do I pay attention to Chaikin money flow? I do not. I saw Mark Chaikin at a seminar, and it wasn't for me. If you can make it work, I'd love to learn from you, but I have not spent a lot of time on it. All right, so most importantly, wishing everybody a great end of the year. Let's see, so I won't speak to you until after New Year's. Happy, healthy, peaceful, prosperous New Year. That's what we're going for. Safe. Happy, healthy, peaceful, prosperous, safe New Year. Tiny will be with you on New Year's Eve. I will not. If we're up here in Vermont, we'll be at a party with a whole bunch of friends, and then I usually go to bed. I try to pass out by 10:30 to get up and ski by 7 o'clock. But I guess if it really sucks and there's no skiing, then maybe I will pop in and say hello. But this is Tiny's deal. So thanks for being with us. We appreciate your time and interest in learning. And we shall speak with you soon. Take care. Bye-bye.